Well, 2022 is in the books. Did the Santa rally happen? Did we get a bunch of lumps of coal? 2023 has already started. First trading day is tomorrow, January 3rd. And to have this discussion, we're going to bring on the one and only Mr. Dan Bird. How you doing, sir?
I'm doing well. How are you? Happy
I'm
New
doing
Year.
well. Happy New Year. Thank you for doing this on Monday. I didn't do any recordings yesterday, so I appreciate you being flexible.
No problem. The market's closed, so
Yeah, I figured. It's all good. So
yeah.
so what happened? Did Santa show up or did he just not
Well,
come this year?
well, he's been AWOL.
He's been AWOL. Is there a chance he still shows up, or is the Santa rally over now that New
There
Year's is?
is a chance, just
All
like
right.
in Dumb and Dumber. You're
There
saying
is
there
a
is a
chance.
chance. I'm gonna share my newsletter, and there's something in there that we can talk about the Santa Rally.
Okay. Thank you.
So I send this out every week. I do the research on my own and share it with other folks. If anybody's interested, just send me an email to breakpointtrading@gmail.com, and I'll send you last week's and add you to the list. So that little section on the left-hand side there is kind of what you're talking about.
Ah, okay. So last 5 trading days through the first 2 trading days of the new year. I didn't know that. Okay.
That's what the definition, according to Stock Traders Almanac.
Okay.
And they do research, market research going back 100 years. So that's what they define as the Santa Rally.
Mm-hmm.
Last 5 trading days of the old year and the first 2 trading days of the new year. So they have something that they call the January effect, or the January barometer. Mm-hmm. January has a 72% chance of predicting the market for the rest of the year.
Okay.
So if it goes up in January, then most likely the market will be up for the year. So these are the 3 criteria that they used. The first one is the Santa Rally. Okay. We got two more days left on that one. Mm-hmm. Number 2 is the first 5 trading days. So that's January 3rd through January 9th. So next Monday. Mm-hmm. And then the third one is the full month of January.
Gotcha.
Last year, we only got one of those. We got a Santa Rally, but we didn't get the first 5 trading days were down, and the whole month obviously was down. And then the whole year ended up being down. So
yeah, that's
it maintained
correlated.
that 72% track record.
Yeah. Okay. That'll be fun to watch, or not, depending on how January goes.
Yeah. And talking about January, here's what January looks like. This is also from Stock Traders Almanac, but I added in all of the other lines and notes in here. Mm-hmm. So what they do is they just give the 20 trading days for January down at the bottom.
Gotcha.
But you can't really figure out which days those are unless you actually put them in.
Right.
So I actually put in, the 3rd through the 6th is the first week, second week, third week, etc.
I understand. Okay. Thank you.
And then I put in the key events that will happen in January.
So based on this report, it looks like, again, over this 21-year period, generally January's sucked.
The first week or so of January is usually up. Mm-hmm. And then, yes, historically, the rest of January is not great.
Okay.
Doesn't mean it will be terrible either, but it's just not
yeah,
great.
you may not know this, but I'm going to ask anyway. One of the things that I expect to come in early January, early meaning, I don't know, sometime before the 15th, just to pick a day, is negative pre-announcements, right? We just closed the year. For lots of people who are on the calendar year for financial reporting, it's their into Q4, which for many companies is their biggest quarter. If people were going to have negative earnings surprises, i.e. a pre-announcement, do you think those could come about as soon as this week or next week?
Yeah, probably. I mean, the ones that end their year at the end of December will be reporting end of January or early February.
Okay.
And if they are going to have pre-announcements, now keep in mind, there's 2 reasons for pre-announcements. The first one is if there is a material change, they need to let the market know that.
Correct.
The second one is they just might want to hedge their bets.
Yeah, I think it
They might want
was.
to use all of the negative economic reports as a way to say we're not going to do very well, and then beat that
Maybe.
number, right?
Wasn't it Micron last quarter that actually had two negative pre-announcements and then
Yeah,
still missed?
yeah,
Yeah. So I mean, again, I negative pre-announcements, really didn't happen for 2 years because everybody was blowing it out. But
right.
we started to see some negative pre-announcements last quarter. I believe, and again, I would love to be wrong, but I think a bunch of negative pre-announcements start next week and certainly the week after when all the accounting starts to come together.
And any good CFO worth his salt is going to want to take advantage of that,
Oh, for
right?
sure. Yeah.
And
Kitchen sink.
pre-announce
Put
so
the
that,
kitchen sink in there. Lower
yeah,
the bar.
throw everything in there now, and if they lower their projections and then they still meet them,
Mhm.
then the Wall Street will consider that a beat.
Yeah, they'll
Or
forget
if they
about it.
even if they
Exactly.
lower it and then beat it, then
Yeah,
Wall Street forgets what they said last quarter.
absolutely. Okay, I was just
So
curious because
yeah,
I think
yeah, I think that's very possible in this
okay,
environment. And that second week, the 15th would be in the second week here between the
right.
two between the green arrows.
Yeah, I think that's when it happens. They'll come back, they'll see where they are, they'll do their journal entries, and they go, "Damn, that's a shitty quarter. What else can we throw in there?"
Which interestingly enough is also the week of the CPI, next CPI report.
Oh, when does that come out? I don't know the dates.
Right,
That's
it's
the
right
12th.
here in red.
Oh, the 12th. Oh, look at that. Okay, cool.
Yeah. The first week of January is normally when all the mutual funds and 401ks are getting funds in.
Yeah.
There's a lot of inflows, and they need to be long, so they have to put that to work somewhere.
Hmm.
So they put it in the market, and that's the reason that the beginning of January often has a nice little rally.
Hmm.
But yes, we could get negative reports in that week. We'll get a CPI report, which I'll show you what I think might happen on that one here in a minute.
Okay.
Um, so all of those things might lead to, historically following the same trend.
Yeah.
Then we've got non-farm payrolls Friday.
Yeah, that's going to be a big one. I think
Yeah,
expectations are 200,000 last I read. And
right.
I got to tell you, I think it comes in light. I think it comes in low.
I think it will come in a little bit low.
And this is again the good news is bad news. Generally speaking, it comes in strong. We like that. But
Yeah.
we don't want it to come in strong because that means the Fed's got more work to do. So I think this is the first time the unemployment or the employment picture looks less strong than the market expects. And maybe that's a little hopium on my part.
I think that's possible. I mean, there's been quite a few layoffs. Now, a lot of those are concentrated in technology,
Mhm.
but it's starting to accelerate. Up at the top, I put the January barometer, what we just talked about,
Mhm.
and then I circled the dates down here, or I
See that?
outlined the dates down here.
Right.
So the two red ones is the end of the Santa rally, and the green one is the first 5 trading days, and then the last one is the full month of January.
I got you. Okay.
So,
Very cool.
however that goes, usually 72% of the time determines what the rest of the year will look like.
Hmm. Okay.
Now,
I like it.
let's first look at my newsletter.
Mhm.
So here's the calendar. Last week it was pretty light. Pending home sales came in
Lower than expected.
much lower than expected.
Yeah. Yep. Housing's in a depression, Dan. I don't know if you know that, but housing is in a depression.
Yeah, I know my rental property's going down. It's still higher than what I paid for it,
Yeah, there you go.
but it's going down. Doesn't really matter. Won't be selling it for quite a
No,
long time.
no. Yeah, so
But
there's
next week,
non-fem payrolls. Yeah, there you go. Sorry.
yeah, next week, the JOLTS number, that's going to be a really important one.
Yeah, again, we hope for that to come in lower. We with
Yeah, they're
the Fed,
they're
we got to keep saying the Fed's winning.
yes, that's right. The forecast is for slightly lower.
Mhm.
I think in general, other than some of the layoffs we've heard about,
Mhm.
in general, the job market is still hanging in there pretty well.
Mhm. Yeah.
And then Friday, we've got non-farm payrolls
Man,
forecasted
three
at
point three point
200K
seven still.
and 3.7% on unemployment rate.
Yeah, the Fed's not winning. That's got to go up for the Fed to win.
Yeah. Well, the Fed wants that to go to 4.6.
Probably, yeah, in the force for sure. Yeah.
Yeah. So both of these will be interesting. The JOLTS number on Wednesday and payroll number on Friday. So
Mhm.
again, that's going into basically that first week of January, which are the
Mhm.
two criteria for the January barometer.
Good.
And then take a look at this. This is
Ooh,
my commodity graph.
this is what you're using for your CPI discussion.
Right,
Okay.
exactly. So if you remember when I showed this last month
Mhm.
for the month of November,
Yep.
all of these were headed lower. In fact, gas and oil were dramatically lower. If you look between November and December right here.
Mhm. Yeah.
But the next one we got on January 12th is going to be for this December period.
Hmm.
And the CRB, which is made up of these 19 commodities over here, agriculture, energy, et cetera, that's basically flat. So it had a nice downtrend, but now it's back up again.
Hmm.
Oil and gas both have spiked higher.
Interesting.
So they're both slightly higher than when we entered the month in December.
Hmm.
And they're continuing to trend higher. Now lumber is down. Lumber's continued to drop.
Yeah.
But what this tells me is, remember last time I said we could have a number in the low sixes.
Yeah.
Last time we went from 7.7 to 7.1,
Mhm.
so a 0.6% drop.
Yeah.
If we had the same 0.6, we'd end up at 6.5,
Right.
right?
Yeah.
However, this looks much different than it did in November.
Yeah. The yeah. I agree.
We could end up with a flat CPI number.
Oh, really? Seven
Yeah,
one.
7.71, something in that. So, in other words, without a six handle.
Yeah, I'm gonna again hope the Fed is winning. I'm gonna hope for a 6.8, 6.9.
That's possible.
Yeah. And I think it's going to be again, I think inflation is three parts. I think what we're seeing now is goods are coming down, used cars, clothing, stuff
Right.
like that. It's
Yeah.
all the easy stuff. That stuff's going to be over in Q1, but I think it's enough to get us to 6.8, 6.9.
Right.
I hope. Fingers crossed.
Yeah. It would be good to get below 7.
I agree. Just
In fact,
psychologically. Again,
I think if we stay above 7, even if it's 7.0, which is lower than
oh,
last one, but still in the sevens,
it's a problem.
I don't think the market's going to like that.
No, because the Fed's got to do more. Yeah, exactly.
Right. So remember, that's right here
Yeah, the
in
12.
that second week. It's right at the point where
Mm.
historically over the last 21 years, the market starts to sell off the end of
Mhm.
January.
Yep.
So watch that. That's really important. That CPI number.
Mhm.
Here's where we are right now for the year, basically.
Yep.
You can see every time we hit this downtrend line and now the 200-day moving average,
Yeah.
which those are basically, going down together now,
Mhm.
then we get rejected. And then we fill this gap down here and we've just traded sideways since then for 2 weeks. We've
Yep.
just
I
gone
remember when
side.
you highlighted that gap a couple weeks ago. You have your playlist. People can go back and
Right.
watch that. You highlighted that
Yeah, I
early.
highlighted it way, actually, probably up in here. I thought
Probably
we'd
up
go
there.
back and
Yeah.
fill it.
Yep. You did. And you called it.
Right. So right now, like I said in my newsletter, I said it's a flip a coin right now, whether the market goes up or down.
Well, when that happens, I always lean on the macro environment. Generally speaking, I think there's a lot of negative announcements, and actually Tesla's deliveries are supposed to be out today. I think I'm gonna look that up and
Yeah,
just see.
we'll talk about Tesla in a minute.
All right, where do you want to go next? I'm gonna look up and
All
see
right,
if I can
so
turn up.
so just to point out on this chart right here, the market right now is below all of its main moving average lines. It's below the 200, which is the spray dotted one.
Tesla missed. I'm looking this up on Twitter right now. Tesla deliveries 405,000. Estimates were 420.
Really?
Yeah, so that's a miss.
And the market's not open today, so
yeah.
So I don't think it's going to show anything, but yeah, it's actually showing it slightly up from Friday's close, but that's extended hours really aren't open until six tonight.
Until tomorrow.
We'll see what happens at 6 o'clock tonight when the after hours futures market opens. But anyway, it's below all the moving averages. The 21-day is trending down. The 21-day just crossed the 50-day. And the market is below all of them. So I said it flip a coin because it's been moving sideways for 2 weeks, but the scales is more to the downside than the upside.
Yeah.
Because it's below all of these moving averages. This is the VIX, still sort of just trending sideways, just like the market, basically.
Yeah. Do you again? The VIX is something I've always watched because it highlights, for me, capitulation.
Yeah.
Do you think it might come in January? You might get that washout moment.
It's possible. Yeah. It's if we do, I mean, we could go to 3,200 very quickly.
Yeah, and that's a number you and
all of those things that we just talked about happen if we get negative earnings announcements, if we get higher CPI than expected.
Yeah.
Right?
Oh yeah, you get a strong jobs number on Friday.
A strong jobs number next Friday.
You get sticky inflation, and then you get pre-announcements. Here we come, 3,200.
Yeah, we could get there very quickly, and then this VIX is going to spike way up here to 40.
Yeah, that's exactly right.
That's what you want to see for a capitulation. We really haven't seen that yet.
Okay.
All right, and then this one we talked about already. This is the Fed fund rate, just to revisit this to see where we're at. We're at 4.28 right now, right up here. The next one's not till February 1st.
Correct.
So there won't be one in January, but
nope.
February 1st is the next one, probably a quarter point.
Yeah, I'm guessing 2 more quarters and then they're done.
Yeah, so that would put us and 2 quarter points and then we're done.
Yeah, 4.75.
So that would put us up at about 483, up about here. Not quite as high as where it was just before the Great Recession, but getting close to that.
Yeah.
Right. And then this is the chart. This is the long-term chart that I use to determine whether we are still in a secular bull. And we still are.
Right.
None of these things have turned red yet. The RSI hasn't gone below 40. The PPO, price performance oscillator, has not gone below 0. So it's still in positive momentum. And the market itself, now remember, this is a monthly chart, so it's moves very slowly. But even though we went below this 200-week moving average right here, we didn't close below it.
Right.
So that's the third one. None of these have issued any warnings that we're no longer in a secular bull market.
Good.
All right, and these I'll save till later.
Okay. You want to just flash Tesla and then we'll get on to the next episode?
Tesla. Yeah, that's what I wanted to do. Actually, let me do that by going here. Yeah, this is what I want to do. I'm going to go to articles. So that's stock charts, articles, and you can get this part for free. You can just log into stock charts, click on articles. And then these are all the contributors here. Some of these we'll be doing the 2023 Market Summit next week, next Saturday, which I sent the link for everybody if you want to join. It's free. VectorVest is also doing one Friday and Saturday next week. I'm going to actually go to that. It's in Tampa.
Nice.
But I put that in my newsletter as well. That's free too. You can log into it, and once you register, you'll get it. They'll send you the recording so you can watch it later if you want to. But I'm going to click on Tom Bowley right here. And here's his 2023 stock market forecast. So here's what he says: large caps must rebound. And then he showed these are monthly charts. So this goes all the way back to 1993.
Oh my goodness.
All right, Tesla's one of these. So it's, I think, the last one.
Okay.
So this is Apple. You see this blue line right here is the 50-month moving average. So that's about 4 years. And you can see whenever this is Apple, whenever Apple gets down to that 50-month or close to it, is when it rebounds.
Okay.
It's starting to come down, but it's not quite there yet.
Mm-hmm.
Next one is Microsoft. Microsoft
Ooh.
hit it right here and then started to bounce back up.
Okay.
So Microsoft might be in the process of rallying. We'll have to see, but it's pretty close to that blue line. Here's Amazon.
Ooh.
Amazon has, I mean, the Amazon looks pretty bad compared to the other ones.
Yeah.
Right. I mean, you can see the green and the blue line. The green line is rolled over, but it hasn't touched the blue one yet. Same up here. The green one is rolled over a little bit, but for Apple, but it hasn't touched the blue one. But if you look at Amazon, the green line is now crossing the blue line. Mm. So it's back to the 2020 pandemic low.
Wow.
Right here. So Amazon is not looking good. His note here says that for the market to rally, we need these big cap names to start to rally too. Hmm. So that's Amazon. Here's Google. Again, Google is right on that blue line, and actually for the last month has been selling off. Yeah. So it is dangerously close to dropping below it. And keep an eye on this PPO. This is the momentum indicator. If it goes below 0, that means the momentum has changed from positive to negative. Mm-hmm. And then finally, Tesla. Wow. Tesla has dropped below its blue line big time. This is the last month. Look at that big, long red candle. Yeah. And again, this is back to 2010. This is a very long-term monthly chart. But if you look at this, he's pointing out that there's a head and shoulders pattern on Tesla. Left shoulder, right shoulder, head. If you measure the top to the neckline, and he makes a point of saying, when you do this, if there are any technical folks out there that are studying technical trading, you learn about patterns like head and shoulders, and you learn that the distance, the target is the distance from the top to the neckline. Should be the same distance to the bottom. But don't make the mistake of measuring that with the actual dollar amounts. And this is a really good example of why. Because Tesla was up around 422 or something like that after the split. Well, if you figured out the distance from there to the neckline using dollars, then the target would be 0.
Oh, wow.
Now, there might be people that think Tesla's going to 0.
Sure.
But I don't think it will. Yeah. So it's better to use percentages like he does here. Oh, I see. 50.7%, then the target is right here at 100.
Okay.
Tesla's not quite there yet.
I think it was 120 or something last week. Yeah.
Yeah, it closed 123.
Oh, there you go.
On Friday. So
doesn't sound like it's going to have a good open based on what we talked about.
No, I mean it could easily get to 100 on tomorrow. Yeah. When it opens. So Tesla does not look good, not very healthy for Tesla. By the way, let's see. This is something that I forgot to do last week. I'm going to do it now, though. Okay. This is a. It might be too late to do this, but this is an ETF that trades the reverse of Tesla.
Oh, wow. I didn't know that existed.
TSLQ. So you can see when Tesla was selling off from the beginning of December, this one had a really nice run higher. Yeah. Right. Went from $55 to $90. Tesla the last 3 days has had a nice little rally, maybe in anticipation of a good number today.
Yeah. Mm-hmm.
All right. But when Tesla drops, this basically should be a mirror image of Tesla. In fact, let's try that. Let's look at Tesla and TSLQ side by side. So here's the daily view. So here's Tesla on the left, and here's TSLQ on the right. Basically a mirror image. Here's the weekly view. So if you think Tesla is going to zero,
Yeah,
this might be a way to play it. Just you can buy this just like any other stock, TSLQ.
Yeah, I don't touch cult stocks.
Yeah,
No, not my thing.
It's probably too late anyway.
Yeah.
Especially with a bad report today, Tesla's going to gap down in the morning.
Yeah, you would think. Yep.
And it could actually start to recover after that gap down.
Yeah.
That's the hard part about the market. You see a report like that, you're like, oh, I'm selling Tesla short.
Right.
And you do that the first thing in the morning, and Tesla gaps down, and it's at its low, and it never goes lower than that. It just starts climbing higher from there.
Yeah. Amateur hour.
Yeah, that and short covering. I mean, there's so many people probably that are short still Tesla.
Yeah. Yeah.
That that's going to give them a great opportunity to take their profits. So the short covering will push the price back up after the open.
Well, do me a favor, show your newsletter one more time, because we're going to get into video number 2 where you do a scan for dividend stocks.
Yeah, we'll look at the dividend payers, and I'll show you something on VectorVest and how we can do a back test on those to see how they performed in the past.
Very, very cool. Folks, if you're listening on the podcast, it is breakpointtrading@gmail.com. Get this report weekly. I scan through it. It's amazing that he does this for all of us. breakpointtrading@gmail.com.
There's a lot of charts in there, so it doesn't take very long to scan through it, really. Sometimes I put a lot of stuff in there. There's quite a bit in there this week.
Yeah.
I actually put in a New Year's resolution for stock trading at the end.
Oh, yeah? I need to go check that out. I have not read this week's.
Yeah.
Thank you, buddy.
All right. Talk to you later.